What is going on, everybody? My name is Steve, and I'd like to welcome you to the channel where we talk about the joys of stock market investing and long-term dividend gain. If it's your first time stopping by the channel, hit that subscribe button. Trust me, you won't regret it. If you're a returning subscriber, as always, welcome back. Well, guys, I want to read something to you real quick. Now, I apologize. I don't know how to do the screen in and show the computer at the same time. So bear with me. I'll be very quick with this. But I'm going to talk a little bit about Carvana. And something I seen today, and we'll take it from there. But yeah, this is a Bloomberg article, and it reads as follows in the title. It says, Carvana plunges as Apollo-PIMCO creditor truce creates stock doubts. Right? Now down here it says, now this article is written by a gentleman named Matt Turner, and it's today. You can look on Yahoo Finance and find the article if you're interested. It says Carvana company plunged on Wednesday as Wall Street pessimists spread on its shares after the online car dealer's largest creditors signed a deal to act in negotiations with the company. Now, the reason why I brought that up is this. We all know that Carvana has been going through it. They've had a lot of shady business practices and a lot of things that are suspect that has ruined their customer relations. What spurred me to do this video was I drove by a Carvana dealership today, and it had one car in the vending machine, and it said closed business. It basically said they were out of business. And I was like, let me go and look up Carvana when I got back to the house, and sure enough, I looked at it, and I looked at the stock price. And what's crazy about the stock price today, it's just wild how this news just came, and like I stumbled across it. The stock price for Carvana right now is $4.15 a share. It then lost $2.58 a share today, which is a 38.5% drop in one day. 38.5% in one day, and it's constantly moving right now as at the time of this recording. Now you got to look at it. You might say, well, it's a $4 stock. What's the significance of this? Think about it. A year ago today, if you had invested in Carvana, the share price would have been $263. So in 1 year, they done went from $263 year to date, right, to $4.16 a share. That is unfathomable. And what led to this? You might ask. From my knowledge and what was reported, from what I can remember. Now, I've done a video on Carvana where I was more specific into it, and I'll leave it in the description box below. But just a few things of what messed them up. They were paying more money than the trade-ins were worth. They were paying, above trade-in value for vehicles just to get vehicles into their inventory. That's one thing. A lot of times you would go to the Carvana dealership, they would just have a checklist. They wouldn't even have a real person that can sit there and break down how much the car is worth, an adjuster or whatever they call them. They didn't even have one. They would just have a regular employee with a Carvana shirt on and the checklist. I've witnessed this myself going with my son to go buy a car. Another thing is they had the paperwork fiasco. And when I say the paperwork fiasco, people couldn't get titles. They couldn't get, all they had was a receipt for something, for a car purchase, but they couldn't get titles. They couldn't get their cars registered. They couldn't get insurance. And they couldn't get temp tags. How do you sell a car and can't get temp tags? So what, they can't ride the car off the lot? They were telling people, hey, give us a couple days and come with the car. People were coming and they couldn't get the cars and all this stuff. They were also having money issues. As far as their performance, I don't understand the whole scenario. They were having money issues. Which led to a lot of class action lawsuits against them. And they're ongoing right now from some of the shady practices that were happening in the business, whether intentionally or unintentionally. A lot of the dealer licenses in various states were getting revoked and they had to get them turned back on, and all this. I think Indiana was one of them. I'm trying to remember back from my old video. But you know, we all remember Carvana when it first came out. You would see the commercials all over the place. You know, it was kind of gimmicky to me, where, you know, they had the vending machine, you know, and these Carvana dealerships just popped up out of nowhere. And a lot of people like, you know, what is that? Like when I seen it, I never seen cars raised up in the air, you know, 30, 40, 50 feet high. Well, I guess higher than that. Because, I mean, some of them layers go like 7, 8 tiers high. And it looked like it said, it looked like a vending machine. They had a vending machine style business model, which was, I mean, new, but I mean, it was gimmicky. And it gained popularity from that. Then, you know, it was hype driven with the stock. And what's funny about it, I think they only had one positive earnings call since they, you know, were running. Because, I mean, you got to remember, a couple years ago, right, especially when Trump was in office, and the stock market, I mean, it had a bull run like you wouldn't believe. Every company almost was making money because the stock prices was rising. And like that was a lot of things analysts had problems with. And then you would see a lot of people saying, oh, we're going to have a stock market crash. We're going to have this, because a lot of people were spending money buying these stocks and believing in these businesses, you know, and just spending money out in the economy, period. You know, you would hear all this, oh, a stock market crash is coming, it's coming, it's coming. Now, crash is going to come eventually sometime. I mean, at some given time. You know, bull runs don't last forever. But like, this is one of the reasons that, you know, a lot of people were saying that, hey, a stock market crash is going to come, because companies like this company was hype driven. People were piling on this thing. You know, I think 280, it might have been in the threes, I think. You know, I can't remember that far back, guys, but it was up there. And they were talking about Carvana on you know, the news, on these stock market news channels. A lot of people were pushing Carvana. Man, Carvana's this, Carvana's that. News on this, news on that. You know, that's why I tell you, you know, you buy the stock, you don't buy the news. And the reason why you don't buy the news is because at any given week, any stock can sound attractive. You know, and a lot of us don't have time to look at the fundamentals and things like that. And people get caught up in the hype, and thus we get these climbs. And then we get these rapid descents. You know, Carvana itself, it had, you know, it had positive things about it. And, you know, like you want to put your money in business that are, you know, profitable, and like, you know, a business that has a good business model, a proven business model. This business model wasn't proven, because most of the stuff, nobody else has the car carousel and all that stuff. So this is the first at a time. They were groundbreaking with this, and it wasn't proven. Only thing that was proven was it can drive the stock price up from people believing in it and falling for the hype. You know, it wasn't out long enough to where it was turning serious profits, and it could weather any type of scenario. And, you know, a lot of things had contributed to it messing up. The economy, COVID, I mean, the pandemic, you know, especially when Omicron came, that really put them in the bind. And I think this business model that they had worked very well in a certain type of economy, and it happened to be the economy that it lined up for. You know, because looking at it now, it was a recipe for disaster. But I think when they were building this and it was taking off, it was kind of like, oh man, yeah, we really got it. And I don't know. I mean, it had to be somebody on the board or somebody inside saying, hey, well, what about this? What about that? And I think it was majority rule, but it was kind of like, oh, be quiet. You know what I mean? Don't worry about it. That'll never happen. And guess what? Shit happened. You know, business model. You know, you could buy a car from home without getting up, because you know how the hassle is, you know, especially in the 80s and 90s. Nobody wanted to go buy a car and haggle with, you know, car salesman, and, you know, the negative moniker that buying a car had, and the stress level. You know, a lot of people don't want to deal with that. So that buying from home thing, I mean, it sounded like a good deal, and I think they was on the right track. I just think they didn't have no fail-safe measures to, in case this happens, we'll do this, and it's just one of those things. And, you know, a lot of people got caught up in this. The reason why I bring it up is a lot of people got caught up in this. Say a year from now, right? You say, oh, well, you know, the stocks, we know the stocks are going to, you know, this is going forward. This is a good business, and this is going to be, you know, it. You know, you can buy from home, and they're the first ones that started. So if anybody comes behind them, they'll already be ahead of them and such, this and that. And a lot of people never sold the shares. And this is one of those things where, you know, to see the drop this far from $263 to $4. And then I think Wedbush gave it a target price where it's supposed to be selling from this drop at $1. I mean, that's messed up. And like the reason why I brought that up is because, you know, a lot of people a year ago today, what's the day, the 7th? I think it's the 7th, December 7th. The stock was $263. Everybody's like, oh man, I'm all in buying in that. And a lot of people got stuck up there, you know, because it was a rapid descent. Come Q1 2022, all hell broke loose, boom. Stock just going down, going down, going down. And people ain't watching their portfolio. A lot of people probably was down. They probably looked up and seen it was down $100, $163 from $263 when they brought it in. Nah, don't worry about it. You know how the market is. It'll change its ways and this and that. And that thing never changed. It kept dropping. And all it takes is somebody to start saying something bad, or you get one negative inclination, or the news start coming out about crazy stuff. Because what blew me was the Paperwork Fiasco. You know, when they were having people on TV, on all these different news outlets, you know, evening news, local news. Hey, Carvana ain't right, man. And a lot of people got caught up in this. And as a shareholder and you believed in the company, a lot of people got smoked in this. You know, but I mean, it's a lesson to be learned in it. You know, every stock that I buy or I say I bought in my videos, I keep up with them. You know, sometimes they say, you know, they say set it and forget it. Yeah, that works when you have a good proven business with a proven business model and the business is profitable year after year. You know, it's a car dealership and it was gimmicky at best. I mean, you got to really watch it to see the longevity, and the longevity wasn't that long for this. You know, the track record wasn't proven. In the beginning, it looked good, but a company's not good if it only works in a good economy. You know, how does it fare in a bad economy? You know, how do they handle it faring bad in a bad economy, when the economy's bad? And this is a life lesson for a lot of people out there. Don't buy the hype. Don't buy the gimmick. Just be careful what you invest in and feel good about why you're investing in something. And, you know, try to cover all your bases when you're dealing with your investments. And you'll be all right. But guys, hey, if you could, man, leave me a comment, man. Tell me what y'all think. Because now they're not even trusting that they're going to pay their debts. I don't even see how they can. They're not selling cars. They're closing up a lot of the dealerships. Nobody's going to buy them out. Nobody want to deal with, you know, because, I mean, those rotating things and, you know, where they had the cars, the vending machine type of concept, that costs money to operate and stuff too. And car dealerships don't need that. So if it's not broke, don't fix it. But as always, guys, I appreciate you spending the time with me. Be careful out there with your investments. Invest in what you know you feel comfortable with. Know your limits. And as always, like, comment, share, and subscribe. I appreciate all the supportive comments. And I appreciate the love you guys been giving me. And I'll see you guys in the next video. Take care.